an extraordinary session to talk about the situation relating to Credit Suisse. And it's the fourth session of the government over the last 4 days. 3 of them were, in fact, particularly looking at this subject. The situation is well known. Credit Suisse is part of the 30 banks, systemic banks at a worldwide level, and one of the 2 major banks within the country. And its destiny, therefore, is not just solely decisive for Switzerland, for our companies and for private clients and for its own employees, but also it relates to the stability of the whole of the financial system. The situation with regard to Credit Suisse has been a source of concern over the past few months, which is why the Federal Council decided over the past few months to look at this and to do so in close contact with FINMA and the Swiss National Bank. Over the past few days, there's been turbulence in a number of exchanges and which have destabilized the most fragile banks. That was the case for Credit Suisse. Despite its good capitalization, Credit Suisse lost confidence as far as the markets was concerned. And after such a loss of confidence, and to ensure liquidity of a bank is part of the measures that we have to take. First of all, in order to guarantee the liquidity, the Federal Council took some decisions on Thursday night already, and those decisions were into operation at 8 o'clock, which ensure liquidity through the BNS by a second tranche of 50 billion francs, and its liquidity that Credit Suisse were able to mobilize from Friday. The first decision that was made as far as this was concerned. Second decision was also taken on Thursday night, and it was a question of a guarantee, supplementary liquidity of 100 billion francs, and that particular guarantee was guaranteed by the corporation. Of course, you can imagine that that particular element was, of course, one of the aspects that we talked about with the delegation from Parliament. As apart from liquidity, we also worked on various scenarios. And these scenarios had already been discussed by the Federal Council during the year. And on Friday, we realized that the sources of liquidity and volatility of the markets demonstrated that the necessary confidence could no longer be restored and that a rapid solution, guarantor of stability, was indispensable. And that particular solution, which is going to be introduced to you tonight, is in fact Credit Suisse will be taken over by UBS. And this solution, in fact, which decided upon was after a few meetings with the Swiss National Bank, so with the regulator, FINMA, with Credit Suisse, and also with UBS. And the Federal Council salutes this and also supports it by guaranteeing the necessary framework conditions to ensure its success.
Liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence, and that a swift and stabilizing solution was absolutely necessary. And this solution is the takeover of Credit Suisse by UBS. It is supported by the Federal Council following several meetings with the Swiss National Bank, with our regulator, the FINMA, with Credit Suisse and UBS. And the Federal Council welcomes this takeover and is supporting it by guaranteeing the framework conditions necessary for its success. Mesdames et messieurs, c'est une annonce, nous en sommes conscients, d'une très grande portée. C'est une annonce d'une très grande portée, bien sûr pour les 2 banques concernées. C'est également une annonce d'une très grande portée pour la stabilité de la place financière suisse. C'est une annonce de très grande portée pour les privés, les entreprises qui ont besoin de ces liquidités et de l'accès au système bancaire. Et c'est évidemment aussi une annonce d'une très grande portée pour la stabilité de la place financière internationale. Une chute incontrôlée du Crédit Suisse conduirait à des conséquences incalculables pour le pays et pour la place financière internationale. Nous avons donc la responsabilité de tout faire pour éviter une crise financière de grande ampleur. Le Conseil fédéral, dans ces conditions, est convaincu que dans cette situation difficile, la reprise du Crédit Suisse par UBS est la meilleure solution pour rétablir la confiance qui a manqué ces derniers temps sur les marchés financiers et contrôler au mieux les risques pour notre pays et sa population. The Federal Council is therefore confident that in this difficult situation, the takeover of Credit Suisse by UBS is the best solution for restoring the confidence that has been lacking in financial markets recently, and for best managing the risk to our country and its citizens. Thank you very much.
Merci, Monsieur le Président de la Confédération. Madame la Conseillère
Thank
fédérale.
you, President of the Confederation.
Many thanks, Vice Chancellor, Federal President. Ladies and gentlemen, I thank the Federal President for his introductory remarks. He made clear what the decision is all about that the Federal Council has had to take over the past few days. Our objective was to safeguard the interests of Switzerland, and it was about making a contribution towards stabilizing the international financial markets and to protect the financial arena of Switzerland as well as protecting our economy. A collapse of CS would have had detrimental repercussions on Switzerland and other countries. Over the past weeks and months, the Financial Department, in close cooperation with the Federal Council, together with the regulator, looked at the situation on the financial market in Switzerland. Last Wednesday, on the 15th of March, then based on the turbulent developments in the market, it became clear that the liquidity of Credit Suisse was no longer secured. In coordination with the Financial Department, FINMA and SNB on Wednesday evening reacted to the uncertainties in the market, and SNB made it clear then that it would cover liquidity of CES in case of a default, and to guarantee liquidity in the long term, legal requirements were necessary in order to make available the required instruments. The Federal Council therefore took two decisions. First of all, last Thursday, on the 16th of March, it decided to create the legal basis required for the Swiss National Bank to make available additional liquidity. You heard earlier that the French National Bank has guaranteed the emergency liquidity instrument. It's a tool that is available in other countries too. However, with this regulation by the Federal Council, we extended this possibility to make sure that the National Bank was able to provide additional liquidity. We did this on Thursday, and it also entered into force on Thursday. The second measure that we decided upon on Thursday night is the fact that the SNB, over and above that, then will give a default guarantee for liquidity loans to the tune of 100 million Swiss francs and billion Swiss francs, and I'm going to come back to this later. This is something else that we decided upon on Thursday. In order to guarantee liquidity, we implemented work towards achieving a sustainable solution, and on the 15th of March, on Wednesday afternoon, we made a number of decisions, and in the subsequent hours and days, the negotiations were accelerated. The Federal Council was kept up to date. The Federal President said earlier that we had 4 meetings in 4 days, and daily we were able to be brought up to speed on the current situation. And I also had daily exchanges with colleagues abroad, colleagues Janet Callan from the United States, as well as Jeremy Hunt in the UK. And both financial centers are important financial hubs, the USA and the UK, and therefore play a very important role. Today, the negotiations between UBS and CS were concluded successfully, and to bring about a solution was the objective of the Federal Council. Is a solid solution which the Federal Council welcomes, and it is suitable to stabilize the situation of CS and also to give the required guarantees to the financial financial markets. For this merger to come to fruition, additional decisions were required, which we made today. The Federal Council made available a guarantee to the tune of 9 billion francs in order to cover any risks and reduce them for UBS. This is about potential defaults and losses based on a specific portfolio, which the UBS will take over as part of the deal. This guarantee will only come into effect if losses of the UBS exceed a certain threshold. It's like a backstop, an insurance which only comes into effect if certain losses were occurred. And UBS, first of all, would cover those losses, and then in the second instance, the federal government would cover those losses and make available this guarantee. Ladies and gentlemen, please allow me further additional comments on the decisions taken by the Federal Council as early as Thursday in order to guarantee liquidity. These decisions were necessary and consistent in order to re-establish confidence of the market. In the liquidity loans of the SNB to cover losses are tied to certain caveats in order to reduce the loss risk for the government and for USB. And this also includes a risk premium which the bank has to pay on those loans. And the president of the National Bank is going to give additional explanations to explain this instrument. This liquidity support is an internationally acknowledged instrument. It's the public liquidity backstop, as we call it. And this tool is also used in other financial centers, not in Switzerland to date. And the Federal Council, as early as 1 year ago, decided to make available this tool in Switzerland too. And the draft legislation was available and was to be decided upon over the coming months. Since the situation became urgent, this new legislation and instrument and tool was introduced for this specific situation. This is an emergency entitlement based on Article 84, paragraph 3, and Article 185, paragraph 3, which was passed. This emergency measure is time-limited, i.e. it needs to be superseded by ordinary legislation, and this is meant to be done over the next 6 months, and a draft piece of legislation is going to be tabled. For the financial support, there is a credit required by the federal government. This covers the loss guarantee, the backstop for the liquidity for SNB, the guarantee vis-à-vis SNB, and the limitation of losses. And this requires the approval of the financial delegation of the Federal Councils. And the financial delegation this afternoon agreed to both backstops, and I would like to thank both delegations on behalf of the Federal Council. I'm sure you will have questions on the technical details on the Federal Council's decisions, and we will be able to answer these questions. And State Secretary Stoffel is present, and also the Director of the Financial Administration is present. I would like to thank all of those involved internally and all of those who are sitting here at the top table, who have been working day and night to bring about this favorable solution. And I'd like to conclude my remarks. The Federal Council regrets that CS was unable to master its own difficulties. That would have been the best solution. And we regret this because many thousand employees are going to be affected, but we are convinced that the employer is going to give them some certainty as quickly as possible, and that's our expectation, that we know what's going to happen. The Federal Council also regrets and deplores that the bank, which used to be a showcase for Switzerland and part of our strong economy, ended up in this situation. Credit Suisse still has many solid parts of the business. It's got a very good workforce, and especially it is a well-recognized Swiss bank. But unfortunately, the loss of the confidence of the markets and of the clients was something that we were unable to stop. By the takeover by UBS, we want to restore this confidence, and the takeover by UBS from the point of view of the Federal Council is the best solution possible. But this solution is also tied to risks. The risks for the government and for the taxpayers, for the financial hub, the economy, for our country as a whole, but also for the international financial stability is a lot lower than in any other scenario. Let me repeat. The failure of a systemic relevant bank would have had severe repercussions globally and in Switzerland. And Switzerland needs to be aware of its own responsibility beyond beyond its own borders. The Federal Council is convinced that the takeover of Credit Suisse by UBS is creating a basis for more stability, both in Switzerland as well as internationally.
Important bank would have caused irreparable economic turmoil in Switzerland and throughout the world. For this reason, Switzerland had to take the responsibilities beyond its own borders. These efforts have paid off. The Federal Council is convinced that UBS takeover of Credit Suisse has laid the foundations for greater stability both in Switzerland and internationally. Ich danke Ihnen.
Merci, Madame la conseillère fédérale. J'ai le plaisir de passer la parole au Monsieur le Thomas Jordan, le président de la Direction générale de la BNS.
Besten Dank, Herr Vizekanzler, Herr Bundespräsident. Frau Bundesrätin, meine sehr verehrten Damen und Herren.
Vice Chancellor, Federal Chancellor, ladies and gentlemen, the role of the National Bank for this international hub and financial hub and the Swiss economy. Let me go into detail. The course of this crisis, I would like to summarize from our point of view. Since last week, we've been in a very extraordinary situation with the current US banking crisis and the crisis and loss in the confidence in Switzerland was increased. This has had repercussions on the liquidity of the bank. Therefore, the Swiss National Bank, as of the 15th of March, it gave a liquidity to Credit Suisse to a very high tune in order to contribute to stabilizing the situation. An important share of this liquidity was in foreign exchange. This liquidity bailout created the time frame required in order to give Credit Suisse some breathing space. It was vital in order to guarantee the liquidity of Credit Suisse in order to find a stabilizing solution, targeting the reason for the loss in confidence. A collapse of Credit Suisse would have had serious repercussions for national national and international financial stability, as well as for the Swiss economy. Over the past few days, with joint forces by FINMA, SNB, the federal government, and both banks, a sustainable solution for the future could be found. To report a successful implementation of the takeover announced today, the National Bank is now going to make available comprehensive liquidity, which can be drawn as needed. And let me explain this briefly. Both banks have unlimited access to the existing facilities of SNB, which is provided by monetary instruments. Over and above that, and based on the emergency regulations of the Federal Council, Credit Suisse and UBS have a liquidity loan to the tune of overall up to 100 billion Swiss francs. In addition, and based on the emergency regulations of the Federal Council to the National Bank of Credit Suisse, this is connected to a liquidity loan to the tune of 1 billion Swiss francs. The exact details of the loan is based on the public liquidity backstop. And this is something that the Federal Council decided as early as 2022. The new financial instruments, the public liquidity backstop, corresponds to the international standard. The Financial Stability Board explicitly approved this as part of the framework in order to guarantee to avoid the collapse of a potentially systemically important bank. It was indispensable that we acted quickly and found a solution as quickly as possible. Credit Suisse, based on its size and its global operations, is considered a systemically relevant bank. And this means that in case of its collapse, this could lead to financial repercussions globally and therefore also be very detrimental to the reputation of Switzerland. This reputation is vital for the wealth management business of the Swiss banking sector, as well as for its economy. The current solution provides that the system-relevant functions are being maintained, and this is access of households and SMEs on their deposits, as well as the ability to draw on open credit facilities and also to roll matured credits. It's about making liquidity available to the Swiss economy. Against this background, measures were to be taken in order to avoid contagion and the collapse of a systemically relevant bank and to decrease the repercussions on the public. Through providing liquidity, it is ensured that both banks have the required liquidity. The National Bank, by giving a liquidity bailout, meets its mandate to contribute to the stability of the banking sector, and it cooperates with the Federal Council and the FINMA.
Thank you very much. And now the chairman of FINMA, Marlene Amstadt.
Vice Chancellor, Federal President, and everybody on the top table, ladies and gentlemen. Today, thanks to a joint effort of the authorities and the two large banks, we were able to bring about sustainable solution to an acute and very serious problem. This is a very important step, which is to protect the depositors as well as the reputation of Switzerland as a financial hub. As of October 2022, the social media triggered rumors on massive outflows from Credit Suisse by its clients. Nevertheless, the bank still met the regulatory minimum requirements, both with regard to its capital as well as with a view to its capital. Thanks to the high security buffer by the regulator, and since the increased buffer because of the too big to fail buffer, the bank was able to absorb those unusually high outflows, despite the fact that the financial data was viable. There was a huge loss of confidence in the clients with regard to its futures. The recent banking crisis in the USA, as well as a general financial crisis, again increased the market reaction. It started a downward spiral, which then was reflected in the share price of CS. The too big to fail regulations are based on solvency buffers, i.e. solvency buffers were able to absorb those real shocks. However, the loss of confidence and the resulting problems were too large, and therefore the authorities had to take measures. It is clear that FINMA is going to accompany the process of the takeover and offer oversight, as well as it has been overseeing the recent talks and will make sure that all legal requirements are met. It is also clear that the requirements The requirements will increase because the bank has become a lot larger. First of all, it's about the takeover conditions. It is important that the banking business of CS is still going to function on Monday. The protection of the depositors is being maintained. The deposits and accounts and other services will remain accessible as usual. It is clear that the player on the Swiss financial market, the federal authorities and FINMA need the banks and need to be able to find solutions in order to meet crises and overcome those. The solution that was presented today, i.e. takeover of CS by UBS, together with stabilizing measures by the federal government as well as SNB with regard to liquidity, as well as the 81 capital instruments, equity required by FINMA, gives stability for the clients of the bank, for the financial hub, as well as the financial markets in general.
Mr. Chairman,
thank you very much, Madam.
You have the floor.
Dear Vice-Chancellor, dear President of the Swiss Confederation Alain Berset, dear Federal Councillor Keller Suter, Chairman Thomas Jordan, Chair Amstadt, dear Axel, ladies and gentlemen. I am pleased to be here today as we announce this integration, one that reinforces Switzerland as a leading global financial centre. Bringing UBS and Credit Suisse together will build on the best skills available in the Swiss Financial Centre and enhance the combined organisation's ability to serve our clients and deepen our best-in-class capabilities. In realising the enormous opportunities this deal represents, we are also aware of the need to support the broader Swiss economy and our clients at a time when macroeconomic uncertainty makes business conditions challenging and unpredictable. I am grateful for the strong support of the Swiss Federal Council, the Federal Department of Finance, FINMA and the Swiss National Bank, who initiated the discussions. We have agreed a framework of support with the Swiss regulators which ensures a successful integration in the best interests of Switzerland and protects our shareholders. I would like to thank the authorities for their close collaboration during this process and will continue to work with them as the integration process progresses. The combination of the two banks further strengthens UBS's position as a leading global wealth manager with more than $5 trillion in total invested assets operating in the most attractive growth markets. It will also reinforce UBS's position as the leading universal bank in Switzerland and further extend our position as the most important Swiss global bank. Having been Chief Financial Officer during the last global financial crisis, I'm well aware of the importance of a solid balance sheet, especially in challenging times like these, and UBS will remain rock solid. This transaction confirms and augments our strategy of growing our capital-light businesses. Let me be very specific on this. UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture. It is intended that the combined investment banking businesses will over time account for no more than 25% of the group's risk-weighted assets. UBS's strength and our familiarity with Credit Suisse's business puts us in a unique position to execute this integration efficiently and effectively with Swiss and international clients' best interest in mind. Ralph Hammers will be the Group CEO of the combined entity, and I will continue in my role as chairman. This transaction supports financial stability in Switzerland and creates significant sustainable value for UBS shareholders. Combining the best of Credit Suisse with our strategy and culture will help these businesses flourish. We will provide updates as the integration progresses. In the meantime, we will focus on serving our clients at both institutions. I am pleased that this transaction will bring the long-desired stability for the Credit Suisse client base. We're well aware that in the coming weeks and months will be difficult for many, especially for the employees. Let me reassure you that we will do our utmost to keep this time of uncertainty as short as possible. Let me close by thanking all parties involved for the incredibly hard work and excellent collaboration over the past days. At the same time, I would like to extend a very warm welcome to all our new clients and colleagues across the world. Thank you.
Thank you, Mr. Chairman. Monsieur le Président du Conseil d'administration de Crédit Suisse.
Chairman of the Board of Credit Suisse, that you have.
Ladies and gentlemen, today this is a historic moment. It's a sad and very challenging day for Credit Suisse, for Switzerland, and for the global financial markets. Since I took on this role about a year ago, it was clear that we could not continue like this. For 7 months now, Uli Körner has been in office as CEO. Of day one, he acted decisively and put new people in key positions. Together with his team, he worked on the cultural transformation as well as giving Credit Suisse a new direction. I have got the utmost respect for Uli Körner and his leadership team. Despite the fact that we managed to achieve many of the objectives we had, we did not have the time to conclude the project in a regular manner. The massive outflows of clients' deposits in October last year was a huge turndown, and we managed to catch ourselves and then started 2023 with a lot of enthusiasm and energy. The recent developments started by US banks hit us at the most inopportune moment. Once, like last year, we managed to overcome the loss of confidence in the markets, but not a second time this time. The downward spiral of the loss of confidence and the situation over the last few days made clear that the Credit Suisse cannot exist the way it is going forward. We are happy to have a solution of which I'm convinced that it will guarantee stability for our clients, our employees, the financial markets, and Switzerland as a whole. It is a very difficult and challenging situation. The decisions weren't easy. And in this current situation, there is no good solution, but the solution presented is the best possible under the current circumstances. Therefore, it is clear that now we need to look forward. And our clear focus is on our 50,000 employees, of which 17,000 in Switzerland. They work hard for our private clients and our wholesale and retail customers, and they will remain a stable partner for our clients going forward. UBS is an excellent and very strong bank. I know it very well. And together with CS, it will master the challenges with know-how, expertise, and with a good feeling for what is feasible. Our employees require stability, our clients need security, and Switzerland and the financial markets need calm and reliability. Ladies and gentlemen, let's look forward. The merger with UBS will give the required stability and security. The Administrative Council, the management, and all employees will give their entire energy to support this process in order to, together with the UBS, create a positive future.
Monsieur le Président de la Confédération, pour la conclusion.
Merci beaucoup, Madame la Conseillère fédérale, chers collègues, Mesdames et Messieurs. Le Crédit Suisse est une banque qui, depuis sa création,
Suisse is a bank which, since its creation, has accompanied the economic development of our country. And I must tell you that the Federal Council is doing its utmost to deal with UBS taking over Credit Suisse. Of course, it's emotional. And of course, it's an emotional situation for the people working within the bank. So with this solution, the Federal Council, the National Bank, and FINMA, within the framework of their competencies, have done their utmost in order to be able to minimize the negative consequences for this situation for Switzerland, for its companies, for its population, for its employees, and also with regard to the financial stability on a national level and on an international level. The Federal Council therefore salutes a solid solution, a solution which is between two private players and offers necessary guarantees to find this confidence again and ensure stability.
Solution between two private players, which offers the guarantees necessary to re-establish this confidence and ensure stability.
Monsieur le Président, nous pouvons passer à vos questions. Qui souhaite, Monsieur
Thank you very much. So now we come to the questions and session.
Der Bundesrat habe schon am Donnerstag Beschlüsse gefällt.
It was said that the Federal Council made decisions as early as Thursday in order to re-establish confidence. It was important, but it wasn't communicated. Why do you tell us this as late as today, and how was this to help confidence if it wasn't made public? Well, on Wednesday evening, it became clear that the Credit Suisse asked the Swiss National Bank for this liquidity bailout, and then we extended this bailout on Thursday and also decided on this backstop. We were convinced that it was important up until the weekend to make this liquidity available, to get through without any interruption, to then on Sunday at the latest be able to present a package. Now, if we had come on Thursday to say, oh, the Federal Council needs agreement of 50 million liquidity, and then we need an additional liquidity vis-à-vis the National Bank to the tune of 100 billion, then this would have undermined confidence and would have sown the seeds of insecurity in the national markets. And we discussed this together with the financial department, and this would have increased this insecurity. It would have been piecemeal, every day something else, 50 million, then 100 million. This would not have calmed down the situation. Now, had it been the case that the backstop had had to be adjusted, i.e. the 100 billion of the National Bank had been used up already, then we would have to communicate very clear, because then it would have created security. But otherwise, we were of the view that this would have been counterproductive.
Mr. Feusi.
Did I understand you correctly that the shareholders, the holders of bonds and the lenders, all of those, that they got away with it, that we saved the Saudis and their boss who on Friday night backstabbed the CS eventually and put the knife in?
Also dazu möchte ich festhalten, dass wir ja den AT1
I would like to say that AT1 is part of the too big to fail regulation, which provides that the bonds,
nicht von Kleininvestoren, sondern
and we're not talking about small investors, we're talking about institutional and larger investors that are held by those that they would change and be converted into equity. And this was part of the too big to fail regulation. And this was triggered here. And therefore, and the investors also have a share, as you mentioned. Well, insolvency is a painful solution for those who hold those shares, but it is a legally correct solution.
Ja, Sie müssen weiter drücken. You have to push while you speak.
Okay. John O'Donnell from Reuters. One of the big lessons from the financial crisis was that there would be no more public bailouts of banks, and also that banks that were too big to fail wouldn't be created. And yet the decision today creates a bank which is even bigger than any bank which has ever existed before in Switzerland. And also the vast majority of the cost of this bailout is borne by the state and the Swiss taxpayer. Could you comment maybe on that, and also perhaps about the division of cost between private investors and the Swiss taxpayer?
Well, I don't know if the question goes to me. I mean, I have to state that very clearly. This is no bailout. This is a commercial solution, because we have a takeover of UBS. Well, UBS is taking over Credit Suisse. So this is a commercial solution and not a bailout. We really wanted to avoid a bailout for different reasons. But I just maybe come back to the question of the too big to fail framework. I mean, the too big to fail framework couldn't have been applied here, really, because usually, you know, this is applied to a bank that cannot meet its liabilities anymore. And here we had a problem of liquidity. So it is not typical at all, you know. And as I stated in my introduction, also the bankruptcy, you know, the bankruptcy of Credit Suisse would have had a collateral damage, a huge collateral damage on the Swiss financial market, also risk of contagion for UBS and other banks, and also internationally. So I was in contact with my colleagues from UK and USA. They're very grateful for this solution, because they really feared that there could be a bankruptcy of Credit Suisse with all the losses. And, you know, the taxpayer in this scenario has less risk. I mean, the bankruptcy would have been the highest risk, because the cost of the economy would have been huge, the Swiss economy. Then I would say that any other scenario that could have been imagined in the too big to fail scenario would also have had more costs than if you have a private partner, a bank, a solid bank that says we take over Credit Suisse. What we do is something that is, you know, the governor of the central bank pointed it out, is a instrument that is well known in other jurisdictions like the UK or the US, which is the PLB, which is a guarantee to the central bank. It's not money we give to Credit Suisse or UBS. So we find that this solution is the best solution, and I hope it will also be welcomed by other jurisdictions.
Madame Amstad et Monsieur Jordan.
Madame Amstad and Mr. Jordan, would you like to add something, Mrs. Amstad?
Situation where we have where solvency takes a hit, and then we'll have to not only to trigger the 81 but also the bail-in bonds. This really is a crisis of confidence, and so that's also why the solution is not the classical too big to fail solution, but we have decided that this solution between the takeover of Credit Suisse by UBS is more appropriate. And yes, of course, now we have an even bigger bank, and in the too big to fail framework, exactly for this situation, we already have requirements and rules, and those rules will apply. They will apply after some transition phase, and this will mean that the capital and liquidity requirements for this bigger bank will be proportionally increased.
Monsieur Jordan.
Thank you. Just one point.
Mr. Jordan.
We should not forget that we have a very fragile market environment at this point. So going into resolution would be anything else but helpful under those circumstances. So this is a private sector solution with limited state intervention, but exactly what is necessary in order to avoid turbulences in this fragile market environment.
Madame?
Thank you so much. Madam Lacqua, Bloomberg TV. I think this one is probably for Mr. Lehman and Mr. Kelleher. Can you give us a little bit more details about the deal? So first of all, what happens to Credit Suisse First Boston, the investment bank? What happens to the Swiss business and job cuts?
Well, it's about strategy. You need to tell.
We, as I've said in my comments, will be running down the investment banking part of Credit Suisse because UBS itself has an investment bank-like model, and that is a model our shareholders want. Our model is very much one of wealth management and asset management, fee-based businesses, which are not traditionally the risky businesses, and there Credit Suisse brings us tremendous value. As regards, and we will work on that, and you will get regular updates, and I did give a target there in my speech on that goal. As regards job cuts, it's just too early to say. I mean, we are clearly cognizant of Swiss societal and economic factors. We will be considerate employers, but we need to do this in a rational way, thoughtfully, and when we've sat down and analysed what we need to do.
And the Swiss bank? The Swiss bank? The Credit Suisse Swiss bank.
It is a fine asset that we are very determined to keep, and and hopefully service their customers and clients as efficiently as Credit Suisse have done.
Monsieur Camartin.
Frau Amstad, wenn ich Sie richtig verstanden habe, vorher haben Sie gesagt, auch Gerüchte.
If I understood you correctly, you said that rumors vis-à-vis CS undermined Credit Suisse. Are you saying there was a campaign against the Credit Suisse, and you know who would be behind that? It was not a campaign. I referenced the Twitter situation in October. Credit Suisse was already weak, and then additional rumors that went round triggered those liquidity outflows and accelerated those. And what's behind this is something that we need to discuss. Fact is that this was the beginning, and then the downward spiral started, which then led to these unprecedented outflows and sizable outflows, and these outflows then caused the situation to deteriorate. We managed to weather the storm in October, and we have the too big to fail with strict liquidity requirements, and FINMA then also has Pillar 2, specifically geared to a bank which requires higher liquidity. And over and above that, Credit Suisse had even higher liquidity above its required amount, and this meant that they were able to weather the storm of those increased outflows in October. I'm from the Swiss television. Can you guarantee that these measures that you've just taken are really going to improve the trust and confidence in the banking system, and that in the morning we don't have another crash of share prices which could then affect UBS negatively as well?
Would you like to answer?
I can comment on this. We made a lot of effort, first of all, to secure liquidity and then to find a solution between those two private stakeholders. But now we require a lot of time. There was a very strong commitment of the Swiss authorities, the Federal Council, FINMA and SNB, and there's nothing stronger available. We did everything we could, and that was necessary in order to guarantee trust and stability. And we will have to see what happens in the next weeks and months. It's not an easy situation, but we managed to bring about a strong solution. And the first reaction from abroad, my colleague talked about her international contacts. I too have had international contacts, and the first reactions have been very positive. And we have a lot of commitments. Other countries realize what we've done, and the commitment was that they're very thankful and that they offer their support. And in Switzerland too, it is absolutely vital that we present a good solution. It's not about the stability of the financial hub, it's also about the SMEs, and it's about loans for companies, it's about the workforce, it's about payment flows, it's about the economy of our country, and we are convinced that this is a positive solution. To add to this, UBS has got a very profitable business model and a model with low risk, and this will help to extend the trust that UBS enjoys to all the activities. This is going to create stability. In addition, we have the necessary means and funds to cover the last few days. And internationally, from the central banks, all colleagues of the relevant central banks have welcomed this takeover very strongly.
Madame Amstadt.
Mrs. Amstadt?
As far as the supervisory authorities are concerned, and the authorities that we are in contact with within UBS, we have a very solid bank and strong bank, and we are convinced that this is a very viable solution. And I'm also convinced that this is a model that's viable for the future.
Bastian Benrath, auch Bloomberg.
Bastian Benrath, also from Bloomberg. Mr. Kellerer, I understood you to say that the UBS intends to keep the Swiss bank within Credit Suisse. Does this not cause problems with monopolies and mergers? Because there is a large market share in Switzerland. And secondly, is there any way for UBS to withdraw from the deal, or are there no options, or was UBS no backdoor to still walk away from the deal? We have the competence with regard to financial stability, and we can override monopolies and mergers as an institution, and this is something that we made use of.
Mr. Chairman of the UBS, do you want to answer the second question?
And the second question being, sorry?
The question was like, is there any possibility for you as UBS to back out of this deal, or is there no possibility at all?
We are committed to making this deal a great success. There are no options in this. This is absolutely essential to the financial structure of Switzerland, and at the risk of being somewhat global, I think to global finance. So this deal is announced, this deal will be executed successfully, and we will update you regularly on those actions.
Monsieur Opacher, je crois.
Mr. Opacher, I believe.
Many thanks. I have a question on the public liquidity backstop. You've passed emergency legislation. The Federal Council announced a year ago that it wants to introduce this instrument. Would it not have been opportune, because we're talking about trust and confidence here, for this instrument to have been introduced last autumn? Why was it not done back then? Well, the Federal Council, as you said correctly, a year ago decided to issue this draft legislation. And under my predecessor, Uli Maurer, this was discussed in the Federal Council. I say this to be transparent, whether we were to accelerate this draft legislation, and this was not done because in the liquidity situation of Credit Suisse, if all of a sudden this were to have been brought about half a year earlier with this emergency legislation, this would have raised questions. And we coordinated with the Justice Department and said if this was really needed, then we could make use of emergency legislation. And emergency legislation, as I said, is restricted. This draft legislation, by the way, a week before these events in the United States, I had an internal meeting where I released the work in order to accelerate this. But at the time, there were reasons. At the time, we didn't accelerate it in the Federal Council in order to not increase the loss of confidence. Can I just come in? Mr. Jordan has an additional question, just very briefly. In October, it would not have stabilized, it would have been destabilizing. And the problem was that the authorities and the National Bank were not in a position to make available the liquidity. We had a rapid loss of trust, and with the instrument, this would have accelerated the situation even further. It would not have helped at the time, on the contrary, but now it was required in order to create this bridge, to have a weekend to find a solution. If we had it earlier, it would not have helped. Well, there are speculations, there are bailouts for the energy sector, just as a by the by. But a question to you, Ms. Keller. Suta, what about the relative risks that the federal government has taken? Well, it's a calculable risk. Perhaps the president of the National Bank can come in here, or I said it earlier. It's not about a cash injection to UBS or Credit Suisse. It's a guarantee vis-à-vis the National Bank to guarantee liquidity as a backstop. But this pay would also have come in different scenarios. If, for instance, there had been a nationalization of the bank, i.e. the federal government had taken over the bank, a TPO, then we would have needed it. Or for restructuring measures, it would have been required. The temporary availability of liquidity would have been required in all scenarios that we had on our radar screen. Many thanks. Well, this liquidity support is linked to an insolvency privilege, and this has to be seen in relation to the capital on the balance sheet. And there is a large share available, which first of all absorbs losses, and then the insolvency privilege is at a level where the federal government and the national bank have a calculable risk. And this insolvency privilege is very high, and the risk is then limited for the national bank as well as for the government. Many thanks. I'm from Swiss Info. A question on the liquidity support of the national banks. If they are drawn, do you need to make available guarantees? What's the interest rate? And what about the commitment bonus, the default guarantee of the federal government? How high is this bonus? Many thanks for the question. We've got different types of liquidity that we make available to banks in special situations. The first tranche is the ELA, the emergency liquidity assistance. That's collateral backed. You could use mortgages or other transactions. Then the second tranche we call ELA Plus. That's where vis-a-vis an insolvency privilege, we offer this liquidity. The banks do not put down a collateral, and the collateral and guarantee is guaranteed by the insolvency privilege. And then the next tranche is the liquidity backstop, and there it's the guarantee of the federal government, and the federal government has the insolvency privilege. ELA Plus, as well as the liquidity backstop, is linked to a risk premium, which the federal government is then entitled to. Many thanks, Mr. Bühler. And about the interest rate? 1.5% risk premium. A question for Mr. Lehmann. Who is responsible for this disaster?
Schauen Sie.
Well, look, hindsight is wonderful, and to point a finger, it's a fact that since 2021, with JADOS, we never left the headlines. We were overtaken by legacy situations, by risks that materialized last year. We were affected by a market model that does no longer work in this market environment, and many clients have been very loyal for a very long time. And last autumn, we had this social media storm, and this had huge repercussions, more in the retail sector than in the wholesale sector, and too much becomes too much. And that's when we reach this point. It's accumulation of various facts that contributed to one another and then materialized at some point. And this then caused the situation to deteriorate. A less technical question for Ms. Keller-Sutter. What do you tell the people in the country who have their savings with Credit Suisse and were extremely worried over the past few days whether their money is safe? Can they still sleep at night? Well, I have an account with Credit Suisse myself. And you asked the question of a client of Credit Suisse. I've got my savings account there, a mortgage. I've got a very extensive client relationship with Credit Suisse. And what we've done now was exactly what was required to protect those people who have their money with Credit Suisse. It's for the SMEs to guarantee all the payment flows. Of course, there is a deposit protection to the tune of 100,000 francs. That's guaranteed. But it's important that the bank keeps operational, that the companies can interact and make transactions. That's what's important. And this solution guarantees this. And in all other scenarios, this would have become extremely difficult. I am very grateful as a client myself that this worked out. I also have an account with UBS. Like every Swiss person, you need to diversify your portfolio.
Monsieur.
Johannes Brinkmann from AWP.
Johannes Brinkmann from ABB. Would it not have been possible to get this cheaper if you'd given support for the CS last week after Olaf Scholz and Joe Biden voiced their support for the financial sector? And the second question, when is the merger going to be transacted?
Dann kommen wir vielleicht nochmals zur dritten. Ich gebe Ihnen nochmals das Wort nachher.
Danke.
Well, I'll give you the floor back for the third question. Let's deal with the first two questions first. Okay. You need to see the same system in Switzerland. Now, in Switzerland, if a bank is in trouble with regard to liquidity, a large bank, then it can ask for liquidity from the national bank. And I found that on Wednesday, Credit Suisse applied for ELA with the National Bank. That's the process. And then the Federal Council has to approve this liquidity, and it increased it. And during the weekend, it was not about, and it's not a question of the financial department, it's a question for FINMA. And if FINMA concludes together with the National Bank that a bank is not viable and cannot survive, then it's down to them to act. But Credit Suisse filed their application with the National Bank on Wednesday. Yes, that's correct. The situation was that there were dramatic changes, and on Monday in Switzerland it was still calm, and on Tuesday afternoon and Wednesday morning it started kicking off. As I said, there were dramatic changes. The downward spiral kept accelerated, and the liquidity outflows increased dramatically. Liquidity was required, and within only a few days, thanks to the liquidity support, we were able to put together the package, and the package would not have been possible without seeing the repercussions and the consequences of the spiral. Just to repeat, for FINMA, we have liquidity regulations and capital and equity regulations. The key indicators have to be adhered to. If there's an indicator for a stress situation, we saw this at the beginning or the middle of this week, then there's this possibility for the bank to approach SNB to ask for liquidity, and in a second step, FINMA becomes active should it come to insolvency or the point of no viability. If this point has emerged, restructuring measures are initiated because of administration, but this was avoided in this case and the solution was brought about. Mr. Brinkmann, you had a third question. When is the merger going to be transacted, and when are the shares going to be issued?
Well, the deal is not subject to shareholder approval. So we expect that this deal, now we're waiting for final regulatory approvals across the globe. So we will complete this deal as quickly as we can. It would be weeks, short months to get this deal effectively closed.
Merci, Monsieur. Next.
Besten Dank,
Thank you.
Evelyn, Wochenzeitung WOTS. Ich möchte nochmals auf diese
I would like to come back to the point on the size of SNB publishes its financial stability report annually, where you can see that these two banks are the largest in Switzerland. If UBS now takes over CS, you are talking about a size of more than 200%. To what degree do you think this is a problem?
Wie ich bereits betont habe, ist das im
pointed out earlier, too big to fail in this system. It's already incorporated that if a bank grows organically or through a takeover, that this would lead to higher liquidity and equity requirements. And in addition to capital and liquidity, there are additional rules for a potential demerger, so that in case of a crisis, the system-relevant parts could be carved out. And in too big to fail framework, this is already stipulated. It's nothing completely new. The only new element here is the fact that we want to do it as of Monday, and there needs to be a transition phase. An additional question, please, and Mr. Jordan first.
Genau, Ihr Punkt ist natürlich ein wichtiger, und ich glaube,
Your point is an important point.
Bank in diesem Ausmaß existiert,
and
die Finanzstabilitätsaspekte.
If we are dealing with a large bank, then the financial stability aspects need to be secured, and FINMA and National Bank's role is to make sure of it. I would think that this is also in the interest of the bank and UBS itself to make sure that it is acting correctly. And it also depends on the business model, as I said. If you are dealing with a large bank which is active in wealth management, where the risks are managed well and are very calculated, then this is totally different. If you have a bank of a similar size that's engaged in activities that are a lot more volatile and are more sensitive to market changes at a higher risk than of loss of liquidity. It depends on the risks, the business model, and then the assessment of the situation.
Very much my main point was going to be what Thomas Jordan said, which is that size by itself is not a relevant measure. You have to look at the underlying nature of capital-light businesses. What I want to make very clear is that we will be de-risking a lot of those tricky businesses that we are inheriting from Credit Suisse. Our model is a wealth management, asset management model that is capital-light by and large, and we've given indications on that.
Ja, vielleicht nur kurze Nachfrage. Hat nicht genau jetzt der Fall gezeigt, dass wir
A quick question of clarification. Does this not demonstrate that we cannot split a bank in its constituent parts? It's a justified question. In a large bank, there's never been a case of insolvency or a resolution, as we call it, with carving out a part of the business. The question is always, why did you not let the group go bankrupt. Well, if you're looking at a bank that's relevant for the system, it has never happened. It would have had huge repercussions on Switzerland as a financial hub, and there are close ties between Credit Suisse and UBS, and it would have created contagion on the international financial markets and triggered a financial crisis. The question is interesting because we debated about this a lot. We have a too big to fail law, and then you have a case where this is not properly taken care of and covered. And these instruments, apart from 81 that are available, it cannot be applied to these cases. And it shows that there are always new constellations and scenarios emerging, and therefore we needed to find a solution very quickly, which had a stabilizing effect and stopped the collateral damage. But you can't regulate trust and confidence, and you can't legislate away cultural mistakes. That's a totally different story. Just to come in here, the difficulty that this is in a very fragile market environment. Had it happened under different market circumstances, then the too big to fail process would have been assessed slightly differently.
Yes.
Ich hätte eine Frage. UBS erhält eine Verlustgarantie.
UBS gets a loss guarantee to the tune of 9 billion francs for a portfolio. What is this? Is this a tricky business, as was said earlier?
Kann vielleicht I start?
Yes, please.
Okay. Es wurde ja gesagt, die UBS hat eine.
It was said that the UBS carried out due diligence, but due diligence was not carried out in as much depth as would be done normally. And during this due diligence, they found that there was a portfolio with certain assets that had to be written off, and that would also generate losses. And we agreed impairment losses, and then in the first tranche would be the UBS, and the second instance would be a default risk, an impairment risk. It's like an insurance, and this will not be divulged in the statements of the federal government. This is only a guarantee in case.
And I think you've summed it up. I mean, you have to do due diligence. These are long-dated derivatives and other liquid assets. There is no reason to believe that Credit Suisse hasn't marked these properly, but obviously they do not fit into our strategy going forward, so we look to unwind them. Now, let me stress, we have taken a significant first loss position. I can assure you we have no interest in losing that money in order to let the central bank take or the Ministry of Finance take a second loss. So it is an insurance policy we've done until we can work this portfolio down. This is standard practice, and this is normally stuff like level 3 assets, long-dated swaps and so on, and we just need time to work this position down and understand them better. And these are indications and nothing more. Thank you.
Merci, Monsieur Kocher.
Thank you, Mr. Kocher. Thank you. With regard to the Swiss market, I don't know whether the response was very clear. Is the competition authority going to study this case? What's going to be done as far as concentrated markets concerned? Mr. Urban
In dieser Konstellation hat die FINMA das Recht, an die Stelle der WECO zu treten.
In this constellation, the WECO is being consulted. FINMA takes the place, and to bring about financial stability, FINMA can approve this constellation. in the interest of overall stability.
After all, bank accounts, for people who've got bank accounts, it's absolutely possible. So there's no question of competition, as Mr. Unger has just said. We're talking about stabilizing the financial market, and so therefore there are exceptions that are possible. Well, is that the situation today? A decision that was made today, but that doesn't mean to say that in the future it could be problematic as far as competition is concerned, no? No, because precisely the question of competition arises as far as the size. So when there's a merger of two companies, for example, that then afterwards have a certain dominance in the market. But as far as this configuration is concerned, there is an exception because we're talking about protecting the savings of savers, and we want to be able to stabilize the financial market, and therefore it's envisaged, and as Mr. Unger had said, it's FINMA that will take Aveco's stance and therefore has authorized this particular transaction. Would you like to add something, Mr. Cavalti?
Ist der Bund der UBS jetzt eigentlich dankbar, dass Sie als Retterin?
Is the federal government grateful to UBS?
Allfällige Erwartungen.
And what about general expectations of the bank as far as payments is concerned? What about enormous opportunities that are opening up? We are grateful to UBS, but we also are grateful to CS. And this merger guarantees the stability of the financial hub in Switzerland and the creditworthiness and the Swiss economy. This merger has come about. We are grateful because also internationally, let me underline this again, any other solution in inverted commas would have triggered a financial crisis, and it would have become extremely difficult. And it needed both and their willingness, and it also needed the federal government to put up those guarantees, liquidity, and so on. And we are of the opinion that this was the only possible solution. And let me just say it again, and let me remind you of the scenarios. We would have had a TPO, a temporary public ownership. The federal government would have bought Credit Suisse. Just imagine, at least on a temporary basis. There are certain examples of TPOs. There are countries that are still stuck with their banks. It would have been an enormous risk for the taxpayer. And then restructuring. We talked about this earlier. This would have been extremely difficult, and liquidation of the bank also would have undermined Switzerland as a financial hub, also internationally. As far as payments, wages and salaries are concerned, well, UBS is not in financial dire straits. We cannot dictate to them. You can only dictate to them if you bail out the banks, because then there will be a stop on dividends. If a bank is financially sound, then they can make those decisions themselves. Apologies. Well, you said also UBS benefits from the situation, because otherwise it would not have been so well off financially. Well, I don't see that UBS is in financial trouble. We are grateful that this merger came about. UBS is a very solid bank, as we said. It's financially sound. It's extremely resilient. And it's fortunate that in Switzerland we have a bank that also stepped into the breach on behalf of Switzerland. Yes, of course, there are opportunities opportunities for UBS also in this deal, of course, but there are also risks involved. And I said it wasn't quite so easy to get the parties together. There were different interests, of course, but at the end of the day, the common and joint interest of UBS and CS and Switzerland was to make sure that Switzerland as a financial hub remains, that the Swiss economy is stabilized, and this is a commitment to our economy and the financial center, and a commitment towards savers and depositors. We want to make sure that the payment transactions keep all this needs to be safeguarded, and in no other scenario would we have been able to guarantee this, and this is the higher interest.
Mrs. Walser.
I've got two questions to Mr. Lehmann. How much has CS already drawn of this credit facility? And is CS going to disappear as a brand? And Ms. Keller-Sutter, you said it's not a nationalization, but you also said that it's a government guarantee that you're giving. Should the behavior of banks vis-à-vis risk should change, because otherwise banks know that they will always be bailed out. Last autumn, we did not need an additional credit facility by the Swiss National Bank. We drew the 50 million last week as a cautious precautionary measure. And I think this worked very well. As far as the brand is concerned, Credit Suisse as a brand up to the closing will remain, and then it's up to UBS to decide what they're doing with the brand.
Ja, ich sage noch gerne etwas zu dieser Frage. Ist das eine Staatslösung oder nicht?
Is it a government solution? No, it's not a government solution. We have a private bank that buys another private bank. And in this scenario, and there is liquidity support, of course, this would have been present in all other scenarios. And this guarantee, this backstop is a default guarantee, i.e. like an insurance. If we had TPO, if we'd done TPO, temporary public ownership, what would we have done then? Then, 15 years after the financial crisis, we said the too big to fail instruments we cannot use because they're not applicable here, but we take over this bank with all the risks attached. And this would have been the government solution. And then too big to fail ideas would have been perverted. But we did go through this scenario because we didn't know whether this merger would come to fruition. And we knew by FINMA and the National Bank, and Mr. Lehmann said it too, that this bank was no longer viable. And what do you do in such a situation? But you're right. If you say that you don't want a government solution, yes, that's why we did too big to fail, the liquidity and the capital requirements and so on, and that all works in principle. Otherwise, we would have perverted the idea if the government had bought this bank. Just imagine the federal government had bought this large bank, but now we've got a private bank buying another. But at the beginning of the series of meetings, we said we need an overall package. If you want to have stability and security in the market, then you also need the supervisory bodies and the political authorities to say, yes, we support this merger and we provide enough liquidity in order to stabilize the system. It's an overall package that you need to look at. There are many questions, and we need to conclude, but we can still take a few more questions. Many thanks. It is the case that all pension funds in Switzerland have a share in a large bank. What's happening with those?
Mr. Jordan.
UBS und Credit Suisse weiter, aber es ist ein Kaufpreis.
I'd like to give the floor to UBS and Credit Suisse. A purchase price was agreed, and the shareholders will be offered this purchase price. And perhaps here we should underline one thing.
Die Aktionäre Geld verlieren im Vergleich zu dem, was sie.
The shareholders will lose money compared to what they had a few months or a few years ago. On the other hand, what would have happened with the share price if there had been a resolution and insolvency on Monday? Then the shareholders would have lost everything. It's all relative. The shareholders still get this price, and you mustn't compare this to what they had before, but to what they would have had this package not been put together. And I think that would be the correct perspective to take. And this applies to all other capital instruments that would have otherwise come into effect.
Oui, Madame.
Können Sie sagen, ob morgen der Handel mit der
Could you say whether dealing with the CS shares will be suspended tomorrow? And secondly, was it subject of the debate within the Federal Council to which degree the management of Credit Suisse is responsible, in part at least, for the loss of trust and confidence?
Wissen wir, ob es ausgesetzt wird?
Do we know whether trading will be suspended, was the question.
Das Management der Credit Suisse bleibt im Platz.
Management of Credit Suisse is going to remain in place. There will be a short transitional period for the weeks up to the closing. Afterwards, Credit Suisse will be a subsidiary of the UBS Group AG, and UBS Group AG is going to then appoint management and the board.
Second question as far as the General Council is concerned.
Und nein, wir haben nicht so viel Zeit genommen, um einfach wie sagen wir, die Rechnung tragen über die Vergangenheit. Aber es wird nicht gemacht. Wir
didn't spend too much time dwelling on the past. The work was very complex in order to have a solution in the short term for liquidity up to now and also for the next few days.
Oui, Madame.
Yes, madam.
Something I haven't quite understood, those 50 billion plus an additional 100 billion, or is it 100 billion in total with regard to liquidity and the backstop?
Die Herr Lehmann vorher erwähnt hat und die Credit Suisse bekannt gegeben hat, ist mittels traditionellem, normaler ELA, das heißt,
we have no more traditional ELA, i.e. emergency liquidity based on collateral. Over and above that, for Credit Suisse, we had a total sum of 50 plus 100, i.e. 150 billion as additional liquidity that we can draw on. 200 in total, yeah, if you add to this normal ELA, then 200 in total.
Mr. Burkhardt.
Da könne man keine Beschränkungen machen. Wir haben jetzt 200 Milliarden Garantie der Nationalbank.
200 billion, guarantee 9 billion by the federal government, and then unlimited bonus payments to the management of the bank. Is that not a little bit difficult to explain to the taxpayer?
Es handelt sich nicht eine Bankrettung.
It's not about a bailout. These are instruments that are available internationally anyway. ELA,
diese Liquiditätsunterstützung,
the liquidity support is something that any large bank can apply for at any time. In Switzerland, it's perhaps not quite as common, but Mr. Jordan can talk about this. It does happen abroad that a kind of bridging support is needed. This liquidity was increased also compared to other countries. The National Bank is quite restrictive in case of bottlenecks with regard to liquidity, or in UK or the United States, as it was intimated earlier, whatever it takes, the liquidity is just injected in order to stabilize the problem. What we give here is a guarantee vis-à-vis the National Bank and not vis-à-vis a bank, and therefore this is totally unrelated to this question. It would be different if the government had to bail out Credit Suisse. Then the regulation about pay and the dividends would have been applicable, but this is a guarantee vis-à-vis the National Bank. Article 10A of the banking law, a systemically relevant bank, if this gets support by the government, then the Federal Council also requires additional measures for pay, because this is indirect national support, well, liquidity support that a central bank makes available to a bank is not considered It's about liquidity support to cover bottlenecks with regard to market development. This cannot be compared with a recapitalization or buying back certain assets. It's liquidity support against the collateral, or in this case, against an insolvency privilege. This is not something that would normally be classified a bailout.
One last question.
Welche Folgen hat diese Fusion für die Arbeitsplätze in der Schweiz?
What repercussions does this merger have for jobs in Switzerland? How many jobs will be lost?
It's far too early for us to say on that at the moment. We're only just beginning the process of consolidation, assessing the impact. But obviously, we also see opportunities for people in this new combination. So we will update you when we have news.
Madame.
Merci. How can CS shareholders get something but bondholders of AT1 were wiped out?
Well, we needed, so the AT1, the whole package has the intention to stabilize the financial system and to assure the stability of the financial system. And for this transition phase, we needed the capital, and the foreseen instrument in such a situation as in the too big to fail instrument is the AT1. And so this is why we've chosen kind of to stick into this, to still stick to this too big to fail framework and to trigger only the 81.
Je vous remercie. Nous concluons ici cette conférence de presse. Je vous souhaite à tous
We also now end this press conference. I'd like to suggest that
we have a deal. Live from New York City for our audience worldwide. Good afternoon. Alongside Lisa Abramowitz, I'm Jonathan Ferro. A special edition of Bloomberg Surveillance begins right now.
This solution is the takeover of Credit Suisse by UBS.
The bankruptcy of Credit Suisse would have had a collateral damage, a huge collateral damage on the Swiss financial market.
This really is a crisis of confidence. And so that's also why the solution is not the classical too big to fail solution.
Here we had a problem of liquidity, so it is not typical at all.
The combination of the two banks further strengthens UBS's position as a leading global wealth manager.
This is a special edition of Bloomberg Surveillance with Jonathan Ferro and Lisa Abramowitz.
Live from New York, coming up on the programme, avoiding another weekend. UBS agreeing to buy Credit Suisse. The Swiss government brokering a deal for more than 3 billion Swiss as officials worldwide race to restore confidence in the financial system. Lisa Abramowitz, have we created a monster or found a solution?
It's a great question. Let's define the monster, right? On one hand, you've got the monsters of moral hazard, which it seems like this has been created. On the other hand, you have this question around, does it create more uncertainty at a time where people are wondering, is this it? The unknown right now in terms of the monster is whether we see ongoing accelerating panic in markets on the heels of what we saw over the weekend.
The fear, quite clearly, Lisa, is who's next. Last weekend we're dealing with SVB and Signature Bank. This week we're dealing with Credit Suisse. Who's next weekend? 2 weekends running. We've been sitting here waiting for a last-minute solution going into the open of Asian trading. That's the problem.
You never want to have all of the official